today's day and age, a lot of people are fighting the fact that they need to work 40 hours a week just to make ends meet. But can life be any easier if you had enough money coming in passively that could cover all your life's expenses? If you answered yes, then you might be interested in putting some ideas together that are self-sustainable. An important step towards financial freedom is to create your own investments. You should aim at different investment methods that will provide assets that you can tap on, only after you are done acquiring them. Luckily for you, Laptop Lifestyler, in this video, we are going to share the 7 investments that will help you quit your job. So sit back and watch this video till the end. While you're here, if you're not subscribed yet, subscribe to the Laptop Lifestyle YouTube channel. Number 1. Real estate cash flow. There are some reliable options for investments. One such investment is real estate, and its value tends to go up over time. A house that cost $79,000 in the early 1990s would now cost nearly $420,000 and more than tripled in value. This can lead to financial gains for potential holders of property. There are many purchases available to you that don't require significant upfront costs. Let's say you buy a property for $250,000 and put $50,000 as the down payment and finance the other with $200,000 over the next 30 years at a 2.5% interest rate. Your expenses, including mortgage payments, interest, insurance, and taxes, come out to be $1,021 per month. That means with your $50,000, you can own a $250,000 asset. Moreover, it's possible for you to rent this house for $1,500 per month. After expenses, the tenant has about $479 cash flow, or $5,748 annually. Your wealth is accumulating through equity on your property and monthly payments as someone else pays off your home. The value of your property is increasing year after year, and you are receiving positive cash flow month after month. Raising the value of your property allows you to borrow more money from your assets. Many investors use this to their advantage. Let's say that your $250,000 property grew in value and is now worth $300,000. So you decide to refinance this house and take those $50,000 out of the property in cash. Then you use those $50,000 to buy another $250,000 property. This means that you can reuse your original $50,000 investment to buy $550,000 worth of growing real estate. You basically double your cash flow since you have 2 properties generating income every month. Investors don't need billions to get started with this path, and it's also not just for rich people. Real estate will help you earn more money than working a regular job. You can double your income by taking out the money you put into an investment and using it on another, higher-priced investment. Number 2. Dividend stock benefits. Owning stocks of highly profitable companies that pay dividends to their shareholders is one of the easiest ways to begin building passive cash flow. Company dividend rates vary depending on the company. Investing in dividend stocks will increase the underlying value of your assets in the long run. Let's say Intel has a 3.06% dividend yield, while Apple has a 0.22% rate. A dividend yield simply means what percentage of their stock they give out to their shareholders as a year-end bonus. A $100 stock with 3% will result in $3 per share per year for you. Now, dividend yields are just something investors consider when deciding to buy stocks. To make long-term financial investments, you'll need to consider investing in companies that have a strong financial history and a wheel of fortune in the future. For example, AT&T has a dividend yield of 8.2%, which is much higher than the market average, but the stock itself has lost nearly 39% in value over the last 5 years. Making dividends a part of your long-term cash flow ensures you have consistent income without asking for much. Companies offer dividends depending on an investor's level of commitment, but this is often negotiable and widely depends on the type of investment. Additionally, some other investment options may provide greater benefits, such as greater ease in the operation and farming out of return rates to suit your income needs. As with any strategy, before making a decision, it is important to fully understand the risks associated with investing in the stock market before choosing any type of asset, because there are few safety nets. Investing in stocks can be a good option for many individuals. Many people aren't aware that stocks can be a valuable part of their investment portfolio. Owning stocks in different companies can help you build your savings, protect them from inflation and taxes, and maximize income from your investment portfolio. Number 3. Developing business cash flow. Traditional jobs are great for making money if you work enough hours, meaning hard work is required on your part also. But when it comes to investment earnings, owning your own business is often the best way to go. There are many businesses that can be profitable, such as physical businesses like a restaurant or coffee shop can be a good investment, as well as online businesses. The strategy here is to own the business but not to operate it. Keep in mind that running a business is hard and not everyone has the skills to do it successfully. Instead of actually running it yourself, you can put people in place who effectively manage your business in exchange for a salary or equity in the company. Becoming an entrepreneur is never easy. There are many ups and downs along the path of your business. This type of asset is considered to be a riskier investment option than other types. Starting from scratch and doing the work until the business can run self-sufficiently is challenging work. You might consider such resources when you start your own business. You can find businesses in need of an investor or a partner or buying an already operational business or franchise. One of the key points on tackling business cash flow is to ensure your money is being used to work for you. As long as your business is growing, you can benefit from spending some of your business's money before paying taxes. However, we encourage you to always seek professional advice before you make any decisions with regards to what you can and can't do with your pre-tax funds. Number 4. Gold. Gold has been a valuable commodity since ancient times. It still remains on the list as one of the most investments. Gold is a unique asset with many benefits, and it has many monetary and non-monetary functions, which make it valuable. And when there are market risks, gold helps achieve stability. Throughout the centuries, cultures have placed value on gold. Societies attach value to gold as insurance, so it always worked like money. The price of gold has historically been an excellent hedge against inflation due to its risk-minimizing effects during high inflation years. Investors have seen gold prices skyrocketing and stock markets plummeting during high inflation years, meaning as asset values rise in response to rising prices. Gold is seen as a reliable store of value that often increases alongside everything else, which not only promotes investments at those times when countries see high inflation, but likely promotion of gold's properties as a non-risk and trusted source of value. Gold has been known to have a relative boost in purchasing power throughout the world, even during periods of high inflation. People chose to hoard and keep their cash safe in gold, coin, and bars, while prices on goods fell sharply. You may view gold as an investment and begin to speculate on the rise in price. Although it is mainly used for jewelry, demand has risen due to a system-wide concern with financial instability. This is a great investment because its price changes when events cause a loss of value for paper investments. Gold has always been able to maintain its long-term value and remains worth considering through times of market volatility. Number 5. Buy bonds. Bonds are considered debt securities and have their own unique uses. They are debt that the issuer owes the holders, and bonds come in two options: either pay interest on them or repay the principal at maturity. There is something that bondholders use for different purposes, including buying homes, businesses, stocks, or other assets. Bonds used to be a great investment. However, at this present time, they are known as not very great investments, since the biggest problem with bonds these days is their lack of returns, and in some instances, don't even beat inflation. But it is now known by other investment strategies, bonds are only used as a layer of protection and can be an ideal secondary income strategy if you're transitioning from your primary form of retirement savings. For bond investors, it is difficult to know the exact time to invest. Your strategy should be well structured in order to avoid major risk when the market crashes, financially freeing you and your investments. In retirement, it is important to manage to keep an eye on the market to take money from equities, unless the market is doing great, but should take it from similarly performing sectors. When fortunes reverse and the market drop, then it's time to withdraw your money from bonds. This gives the equity side time to recover and not be sold during down times. You should make sure you are always adjusting and keeping your investments current no matter what. This includes looking at the equity side of things, which will likely see bigger returns than the bond or cash sides. Number 6. Investing in crypto. Cryptocurrency is a form of digital money that makes use of blockchain technology and has many benefits. It has become a popular investment choice, often due to the recent increase in adoption and acceptance. In addition, they have a limited supply with a capped value, which what makes it viable for investors in the long run. With the hype around cryptocurrencies, it's hard to ignore how impactful they've been in recent years. The whole idea of a cryptocurrency is to have a decentralized worldwide currency. Cryptocurrencies are often considered digital gold because they can't be easily manipulated by a government, with suddenly increasing its value like fiat currency is able to do. It will eventually allow cryptocurrencies like Bitcoin and Ethereum to act as a form of safety against inflation. It may become transactional currency in the future. Investment is flowing into new and exciting asset classes, such as cryptocurrency. Bitcoin is the most well-known cryptocurrency, but there are thousands that exist. These currencies are created digitally and can be traded worldwide, one of the newest and most exciting investments available to you. Number 7. Investing in startup companies. Investing in startups can be a risk, but these investments offer potentially high rewards. That is why people keep investing in them. When determining which type of startup is the best for your own goals, it's important to examine the market and industry conditions. Also, consider who exactly you want the startup to reach out to, since you'll also be responsible for finding the venture capital funding and decide on which horizontal markets would be best crushed. By investing with these businesses during the early stages of operations, you have the opportunity to achieve levels of return above those available in mature industries. Also, you allocate a small percentage of your portfolio into startups and know that there is a high likelihood that these investments will go to zero. But on the other hand, if you invested in the right company, your wealth can skyrocket and take them to completely new levels of wealth. All of these are great investments. Final thoughts. You may be wondering what your options are now that you're on the other end of your career. We all know quitting a job can be terrifying and exhilarating at the same time. As you contemplate on your next career move, consider the 7 investments that we mentioned in this video to prepare yourself financially. Set your financial future in order by creating passive income streams. Remember to track your progress along the way. That's it for this video, Laptop Lifestyler. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and help you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!